If you're old enough to remember how central banks, how conservative individuals, non-speculating individuals, those who wanted to protect their wealth for the long term, how they looked at gold, and this would include the Chinese, they reckoned that you should have somewhere between 10 and 15% of your money in gold. If you just take that 10% and you look at the cross-border flows, firstly the big capital inflows in the 80s, and then the growing surpluses with continuing inflows, the amount of stuff crossing the PBOC's desk, you take 10% of that.
Alasdair Macleod is a leading precious metals analyst and the head of research at Gold Money, a global leader in precious metal custody and the world's largest precious metals network. For decades, Macleod has studied and documented shifting geopolitical dynamics and their impact on the precious metals industry. His work often focuses on China's strategic moves toward establishing a gold-backed financial system. According to Macleod, China's growing demand for gold reflects its intention to move away from the debt-based fiat system and adopt a more sustainable, asset-backed approach. He believes that China's strategy for a gold-backed system began in 1983 when the People's Bank of China, PBOC, was designated to acquire and manage gold and silver on behalf of the Communist Party. Since then, Macleod contends that the PBOC has been discreetly accumulating gold, amassing over 27,000 tons in preparation for a major shift in the global financial system. Macleod's analysis suggests that if 10% of the foreign exchange flows through the PBOC had been invested in bullion, it would equate to approximately 20,000 tons of gold. This gold, he argues, has been hidden in various government accounts, including those of the People's Liberation Army and other Communist Party organizations. Despite the 1983 regulations preventing Chinese citizens from acquiring gold and silver until 2002, China aggressively invested in gold mining, becoming the world's largest gold producer. The government maintained a monopoly on gold refining and continued to import substantial quantities to support its mining operations. Macleod concludes that China's actions indicate a deliberate strategy to amass and conceal gold, preparing for a new global order where gold and silver play a central role. For more insights from Alasdair Macleod's interview, don't forget to like this video, subscribe to our channel, and turn on notifications to stay updated with our latest content. Thank you for your support and enjoy the video.
The People's Bank of China has been buying gold. But actually it hasn't been buying gold, it's been selling dollars. It's been reducing its dollar commitment. Now, as to whether it's frightened about the future value of the dollar, or whether it is merely in line with the Communist Party's meme of reducing the involvement of the dollar, you can pick either of those reasons. When we look at the other central banks, predominantly in Asia, who have been accumulating gold, again, I think there are these twin reasons. They can see that the geopolitics is actually working against the dollar, so the dollar's value is likely to decline on that basis alone over time. Furthermore, they can see, they will know, they have the inside track. They have these sort of quiet meetings to which we are not privy, amongst the monetary panjandrums, if you like, in the Asian central banks, knowing that they're moving towards a gold standard. It's probably some way off, but obviously you need to accumulate some gold. Now, India is very interesting in this because India has denied gold. India has been Keynesian in its approach to economic management. And I think that also includes, sort of a sort of semi-official view that gold is a pet rock. But that has now changed. The government is now accumulating gold. Why? Because they're a member of the Shanghai Cooperation Organization. They're privy to the conversations, and they know that that's the direction in which it's going. They don't want to be first going there, but they know that they would be complete idiots not to accumulate some gold, even if they hope the problem will go away. So that, I think, is what's happening at the central bank level. Now, at the market level, we have seen for well over a decade now that the Chinese in particular have been stripping gold out of Western vaults. out of Western mines, whatever. They have been accumulating gold. I have a copy of, in English, of the original articles appointing the People's Bank of China to act for the Chinese nation in the accumulation of gold and silver. And that was dated in 1983. Now, since then, there's been massive investment inflows and through the 80s, and in the 90s, massive and growing, and through into the 2000s as well and beyond, growing export surpluses. Now, all the foreign exchange transactions are handled by the same organization, the People's Bank of China. So all those flows go across their desk. Now, if you're old enough to remember how central banks, how conservative individuals, non-speculating individuals, those who wanted to protect their wealth for the long term, how they looked at gold, and this would include the Chinese, they reckoned that you should have somewhere between 10 and 15% of your money in gold, and the rest is credit for you to, do whatever, buy houses, buy expensive yachts or whatever. That's the Arab approach. If you just take that 10% and you look at the cross-border flows, firstly, the big capital inflows in the 80s, the amount of stuff crossing the PBOC's desk, you take 10% of that at contemporary prices. And remember, this was a bear market that took the gold price down to $250 in 2002. Then I reckon that was over 20,000 tons. That's a substantial amount of gold, the largest, in fact, of anywhere in the world.
At the end of January 2024, China's report to the IMF indicated that its official gold reserves stood at 2,191.53 tons, with an increase of 243.22 tons added in less than 2 years. This amount places China behind 5 countries in terms of gold reserves: the United States, Germany, Italy, France, and Russia. However, if Alasdair Macleod's claim is accurate and China actually holds over 7,000 tons of gold, this would surpass the combined reserves of these 5 countries. While there is skepticism about Macleod's figures, it is widely agreed that China possesses significantly more gold than it officially reports. In contrast, the official U.S. report states that the country holds over 8,000 tons of gold, but experts believe the true figure is much lower. As China continues to underreport its gold reserves, withdraw gold from the Shanghai Gold Exchange Vault, and encourage its citizens to buy more gold, the U.S. remains entrenched in its debt-based fiat system. Let's return to the interview.
If you look at the savings ratio, the savings ratio in China is over 40%. But more importantly, the household savings. In other words, this is just households. These are individuals who are saving, if you like, their own earnings, their own profits, whatever, is estimated to be 35% of China's GDP. That is roughly $6 trillion. So you've got $6 trillion of savings going into property, stocks. It can't go into foreign currencies because there are exchange controls. That's not permitted, and it goes into bank accounts. Property is no longer fashionable. We needn't discuss that. The stock market for the last 3 years has gone down very substantially. It's recovered a little bit this year, but I would suggest that the sort of rather conservative saver in China is not really all that switched on by the stock market. So what do? Well, it's all been accumulating in the banks. And the banks offer what they call certificates of deposit, which is slightly different from our CDs. A certificate of deposit in China is basically a deposit of up to 3 years with a fixed rate and a better rate of interest than, let's say, instant withdrawal or 1 month money or whatever. But these banks also offer gold accounts. And this is something which was brought in by law getting the banks to do this, and it's all part of the gold ownership story, which China is working towards as a means of its ultimate protection from our attacks on China or our attacks on ourselves as we destroy our own currencies. All you need to have is 500 yuan, maybe 600 yuan in some banks. That's the equivalent of about $70 to $80 in order to open a gold account. Now, I don't know whether the banks, match the gold account with physical gold. I suspect that they probably run a sort of fractional reserve system. I doubt if it's highly leveraged. I very much doubt that, because they know the official policy. And I would think they're in the market picking up gold whenever they can. When it's offered, take it. I think that's what they've been doing. Just bear in mind that the alternatives for this $6 trillion equivalent. $6 trillion, incidentally, at the current price is 75,000 tons of gold. I mean, we're talking a considerable amount of moolah here. You can see how it is that the shortage of gold in Western markets has been getting greater and greater and greater. You only got to look at COMEX and see the withdrawals. Now, the withdrawals don't necessarily go out of the vaults, but they certainly go out of the possession of the liquid hands, if you like, in the COMEX market. And I mean, there's staggering amounts being withdrawn, and now this is also happening with silver. So where does gold go in this? Well, let's put the monetary thing aside and just think in terms of supply and demand. Well, there's no supply, and there's demand, which on rising prices could indeed become self-feeding, because another aspect which various of my friends have noted is that in the futures market, the Chinese speculate wildly. I mean, they want leverage, they really do. But we're talking about Chinese traders, not the housewife. They know that, they're close to the financial system. They know the story I've just been telling you about the People's Bank, etc., 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 about the official attitude to gold, the official attitude to the dollar, and so on and so forth.
As time goes on, the state of the U.S. economy increasingly resembles past periods of severe financial strain, such as the 2008 financial crisis, the high inflation and interest rates of the 1980s, and even the late 1920s before the Great Depression. With a debt-to-GDP ratio of 130%, the U.S. is one of the most indebted nations globally. Experts anticipate that the situation will worsen as the U.S. continues to accumulate debt. This trajectory mirrors Japan's current situation, where a 260% debt-to-GDP ratio has led to a looming sovereign debt crisis. Alasdair Macleod strongly believes that returning to a gold standard is the only viable solution to prevent a global financial collapse that could devastate many. He asserts that only those who invest in gold and silver will be able to withstand the impending crisis. Please share your thoughts on Macleod's predictions for the US dollar, gold, and the global economy in the comments below. Also, don't forget to like, subscribe, and turn on notifications for more updates. Thank you for watching.